Hello, everyone. Happy Sunday. This is Simon with AvaTrade, and I'm welcoming you back to our weekly webinar, the called Weekly Trading Plan. So, for those of you that are coming back, of course, you know what it's all about. And a few words for the new people, of course, I want to welcome you. And the idea of this week, it's pretty much it says in the title, as you can see, Weekly Trading Plan. That's the whole idea of the webinar. And in a simple way, not just in trading, in life in general, in anything we do, it's good to spend a little bit of time on planning. And that's how actually this webinar started. I think one of the webinars that I did, somebody asked, because I mentioned something like homework, doing the homework, and someone mentioned we're going to have a webinar about homework, and that's how this webinar came alive. And basically, it's very simple. We're planning the trade and we're trading a plan, and it creates more organized way of trading, less chaos, less spontaneous actions, and so on. And it's proven if you speak to any successful traders, they're all actually having a plan for the week, for a day, for an hour, whatever the time frame they trade. So this is the idea of the webinar. Now, this is me, Simon Friedman. For those of you that don't know me, I'm a senior account manager with AvaTrade. I've been a proprietary trader since 2000 until 2011, and then after that, I became educating other traders, and I kind of step away from daily proprietary trading, which was pretty stressful to say the least. And I was educating traders, and currently I'm working with AvaTrade as a senior account manager. So the agenda of the webinar is pretty much the same every week: indices, stocks, commodities, and FX. And we'll be going through some instruments, trying to figure it out, what's happening and what possibly could happen. These are the channels that you can follow us on YouTube, on Twitter, on Telegram. And YouTube, as I always say, it's a great source of information. It's being daily updated. New things are being added, including this webinar. You can find it there. You can sign up for the channel. You can click on that bell and you will have notification when things are updated, when new things are coming in. And this is the risk warning. Pretty much everything we do here is for educational purposes and not to be taken as trading advice. You can look it up, the full statement on our website. And let's start, as I usually do, with the big picture. What we have for us. We have war still going on, which just past 3 months. It's intense. We have inflation. We have Feds on the horizon with another hike of the interest rate. Not just the States, a lot of countries and places in the world are suffering from a high inflation. They're trying to take some measures, so on. So let's just go through the calendar really quickly, and then we'll go to the trading terminal. So as I always say, I just take out the high impact events for the week. The rest you can look it up for yourself, and it's important to know what's happening in that market or that region that you're involved with your trading. So I just took, as you could see, the impact in red, the high impact. So these are the things that are happening in the upcoming week. We have CPI numbers from Germany on Monday. Tuesday, manufacturing and non-manufacturing PMI from China. Very important. China is really being watched closely as they've been really struggling with COVID. A lot of production was shut down, including Tesla. We'll be talking about it. So we'll see how the PMI numbers are showing. We have GDP numbers from Canada. We have Wednesday GDP numbers from Australia, retail sales from Germany, manufacturing PMI from US, interest rate decision from Canada, very important on Wednesday. We have Australian trade balance. I don't know why they put it high impact. Usually it doesn't show as a high impact. And we have ADP employment change on Thursday from the US. That gives us a little bit of an idea of what the non-farm payroll will be. As you could see, they're expecting on ADP about 280 and the 310 they expect on Nfps on Friday. So Nfps is pretty much the most important thing of the week. And as just for those of you that don't know what it is, it's really it's employment and unemployment data that being released every first Friday of the month usually, and that's the number really being watched closely by investors, of course, by the Feds, as they're trying to see how the employment is working out in their decisions on the monetary policies, including the interest rate changes. So that's what's happening. By the way, before I forget, it's a long weekend in the States. Monday, the US markets are closed. It's a Memorial Day. That's what the significance of it, of course, you can learn about, but that's what's actually happening in the States, where the barbecue season opens up on a simple level. People go to the parks, they travel, they do things, and they go out to nature, parks, and so on. So Monday, no US market, okay? And that will be very interesting, and we'll be talking about it in a moment, because we had a really, really strong week for the US equities. Okay, let's move on. We're going to look through some instruments. We start with indices. And just to give you an idea, that this week has been very, very strong for indices. As you could see, if you take a look on the S&Ps as a general indication, 1, 2, 3, more than 3 weeks of losses were raised in 1 week. So it's very, very strong. And technically speaking, we are on the way to retest the 50-day moving average here. We're still below all the averages. So S&Ps made only Friday alone, it made a move of 2.5%. It was a very strong move here, and it just added up to a total of 6.6% weekly move for S&Ps. Nasdaq moved 6.8% this week, very, very strong move, and Dow Jones moved 6.2%, breaking the 8-week decline. If you could see on the weekly chart, 1, 2, 3, 4, 5, 6, 7, 8 weeks down. 1 week erased pretty much half of that move. Very strong. Now, the question before we go to specific instruments, the questions you probably read about or will be reading over the weekend. A lot of controversial things, mostly negative. Said don't get excited about this move. Some, including a big investor, Ackman, he said that the fact that the market moved higher, it actually might push the Feds to be more aggressive in increasing the interest rate and so on. I'm just quoting what he said. So a lot of people said, don't get excited. We're talking about the analysts, don't get excited. It's going to be a tough summer. I mean, it's a strong move. Apparently, after the recent sell-offs, we've been selling off since March pretty much. And the investors and traders found the reason to get in. They got excited about certain things. I'm really not sure what. Retail stocks bounced strongly. Airlines bounced strongly. Anything to do with tourism, traveling bounced strongly. I guess we're entering the summer. A lot of excitement, a lot of expectations. So maybe that's what it is. We're not here to judge. We're going to be taking one day at the time. By the way, I just wanted to share with you something on the personal note. I took a week off. I know some of my customers are here in the webinar as well. I took a week off. I purposely didn't take my laptop with me. I just wanted to really clear my mind. It's been a tough few months, watching the market and participating in the market, and a lot of things. I just needed to clear my mind, and I'm happy I didn't take the laptop, because that's the only way I could have stayed from really actively being involved in the market. But I just want to share with you something funny. I went to Greece. I went to Santorini. Beautiful place, by the way. For those of you that've been there, you can confirm that, and for those of you that not, you can probably visit the place. It's one of the islands in Greece. So I didn't take the computer, of course, but when I went to the restaurant, I had dinner, mostly fish, every evening, pretty much. and they're not really in a rush to bring you food. So I was sitting there with the phone. I couldn't stay totally away from the markets. I was watching the markets, and I made a few trades here, a few trades there, and not to brag about it, of course. I did make some money. They covered the dinner each time somehow mysteriously, but I just thought about it. I just wanted to share with you on a personal note that really being a trader, it's an amazing field. It just gives you ability to really do things at anywhere. You can do it, online to supermarket. You can do it while you're waiting for your dish at the restaurant. Of course, you can do it at your home and the office and so on. So I hope that you feel the same way. That I personally, I'm very thankful that I got involved in the year 2000 with trading, and that was the whole idea, to give me flexibility. Before that, I was managing a medical facility, an adult home in New York, and then my idea going to trading is to give me really flexibility to work anywhere and to do things and to be my own boss pretty much. And I've been living in a few countries since then and changing places and so on. So I hope that you feel the same way. Of course, it requires skills, it requires discipline, but it is possible. And of course, we're here to help you. Just a little bit of a personal note. So going back to the trading now, indices. Um, Now it's going to be a very interesting week because Friday. I just want to bring it back to you. The S&Ps I'm using as the general thing. Take a look. We closed at the highs. The last 3 hours of the day were really strong to the upside. And I personally was expecting after the whole week move to having a little bit of a sell-off or take profit before, especially the long weekend, because the market is not going to be open till Monday night, Tuesday, and it didn't happen. So it is a very, very strong, technically speaking, very, very strong sign that we are or we might continue moving higher in the upcoming week. Now, anything is possible, and anything could happen. But I guess we'll see on Tuesday what's next. People will digest things. The bulls might get stronger over the weekend with their convictions, or the bears might come and start a really strong fight and pushing the market lower. We don't really know, and that's the whole beauty of it. We're really ready for whatever's in front of us. So the U.S. index is strong, as you could see. Um, Europeans, FTSE, go back to daily chart, very strong, coming back to retest the highs again. DAX, very, very strong. We broke in the past 2 days, we broke the 50 moving average. We are on the way to retest the 100 moving average. Very strong move to the upside. Now, what caught my attention is actually Spain. I think a few weeks ago, I added it to my list and I shared that with you. It's been very, very strong, stronger than other Europeans actually. And we closed here at 8,900 exactly. So we did retest this high of here of 8,909, and it looks like we are going to face some resistance there. So it could be potentially, if the market pulls in again, it could be a nice shorting opportunity, or the opposite. If the global equities are getting stronger, we might see a closing about this and going higher to retest the previous levels. I think the first scenario of going down, it's probably more likely if the market moves lower and the sell trade potential here really presents itself. Now, why this move was very strong vertical move without any pretty much corrections. So potentially we could see a move down, maybe retest or retouch the 200 moving average on the Spanish index there. So another thing that brought or caught my attention, China, with all the global indices really, really running, it didn't do much. Take a look. The last drop that happened on the 24th of May, in 3 days, we couldn't recover it. So it's very weak. That China is really, really having an issue there. Of course, they're trying to struggle with the zero COVID policy. But this is my concern, and it just adds to more conviction. This move higher on the global equities is a bounce that is doomed to be sold again. not here to tell you what to do, of course, using your own judgment. But China is a big indication of what's happening, and so far it's not showing really a lot of strength. So for a strong conviction that we are going higher in the global equities, we should break about this 13,500 on China index. Unless that happens, we're really having an issue. So we are in the channel between 12.5 and 13.5, pretty much on Chinese index, and we need some good news for it to go higher and close above and continue to the upside. Now Nikkei, it did have a strong move, but also it's about to face resistance at a little bit higher level. So again, just to wrap up with indices, strong moves on US indices, strong move on Europeans, especially Spanish DAX and FTSE, and China is really lagging. So we need to either China to catch up and show the strength, or it's gonna drag every other index to the downside. And I guess we'll see in the upcoming week. So let's take a look at the stocks, individual stocks. Let's look at the big names and see potentially what happened here. So Microsoft is the one that broke through the previous support that later became a resistance. So we're above the resistance here, still below all the moving averages here. Google, take a look in 3 days with the gap last day. We are facing resistance here, the one that we kind of couldn't go higher from, and that's 22.39, 22.40. So we are closing. We close at 22.41. So if we're moving higher here, it could be a sign for continuation. But again, what the general market will be doing, that's the trick. So potentially it could continue sliding lower. Facebook, with all the moves and strength, we're still below 200 and we're still below the 50 moving average. And as we spoke about, they have a lot of fundamental issues. And it looks like this gap down was really aggressive, and we came back, we closed the gap, but we didn't move any higher. So that's Facebook. Apple, strong move, but similar idea to all the big stocks. They're really facing resistance at the recent resistance levels, right? So this high here was 149.66. We closed at 30 cents or 29 cents below it, right? So we are facing a strong resistance. We are technically below 150, which was a technical level as well. Intel, same idea. Take a look. We're stopping at the previous resistances. So we are at the really key levels here. And I guess next week will determine, and of course, NFPs at the end of the week will add either positive or negative kind of taste to the market. So that's the big stocks. Now let's take a look at Tesla. Tesla had the three strong moves higher, and the same thing. We are at 757 level from which the whole move happened. We stopped right there, 758. We closed. And the Twitter, Tesla Twitter saga is still going on. I've heard the last thing I've heard that shareholders are taking to court both companies for manipulating or affecting the stock that is not favorable to them. So we at 40, right, on Twitter, and let's see what happens then. Now AT&T, I spoke to you a few weeks about it, I think last week as well. AT&T is doing what actually the investors predicted the moment they kind of got rid of all the weight of entertainment and other thing, and they just remained pure telecom company. Investors love it. We are going higher, and it looks like money is coming in. We're in a nice uptrend on the AT&T, and this is something that investors like for the long term, and it looks like it's a good idea. We just closed above 50 moving average. I think it's one of the stocks that recently done it. Most of them really below. Walmart, the recent loser, also had a nice move, but it stopped right here at the second gap down. retailers, like I shared with you in the beginning, they really had a nice run. Now the question is, will it continue trying to close the next gap and the next gap? We don't know. We'll be watching the markets in general. So again, to wrap up the stocks, it's the same idea as the indices, because indices are stocks at the end of the day. We had a nice bounce. Some excitement came to it. Some buying power came to it. And we'll see if the next week will continue to the upside, or we're going to continue selling off. And if we do continue selling off, it's going to be very interesting how we're going to hold to go back. Just I want to bring the S&Ps. If we do continue to sell off, so if we take S&Ps, first of all, we would need to retest this level here, the high of, what's the high here? 40.95. And if we close below it, then the next stop is going to be retesting the recent lows. That's going to be very nice trading to the downside. And of course, if we are continuing to the upside, we first will be retesting 50 moving average and so on. And if we continue higher, they around 4,300. That's a strong resistance from which we made a lower low from there. So that's it with indices and stocks. Let's move to commodities, go through them. Crude oil, I shared with you last week that we need to close about 111 to move higher. It did happen on Thursday. We did close higher Friday, continuation to the upside. Now, we might continue retest these levels, the recent highs. That was 116.62. There's a possibility also going higher. Now, fundamentally speaking, the whole world is still buying Russian oil. Some of them are cutting it. The last thing I read, that Russia just shipped a huge amount of oil to China and India with the discount prices. We don't know what the price is, but they have to sell it because eventually the agenda of Europe is really to kind of survive without Russian oil. Somehow they're looking to do it. So again, as the markets move higher, more excitement came in. It looks like the traders thinking there's more demand coming in, summer, traveling, and so on. And that's added to geopolitical issues with the war. Oil broke through this resistance. They couldn't break for a while. 111. We closed at 115 on Friday. 115.27 was the high. We closed 115 even. So let's see what's next. Natural gas. I share with you that when we came to retest 8, from there we might see the 9 again, and we did actually. We moved even higher on Wednesday and Thursday. We had the same highs actually. High was 942, and on Thursday 944, and then we slid lower. So the new levels on natural gas 943, 944, and it might continue again. It's all geopolitical. Gold, as we said, this move happened on the sells, on the risk of trading. Gold had a nice move in the last 2 days, the last 3 days actually. It went down, and on Friday when the market really went higher, it didn't go lower. So that's also proof that how real that move is. Just if it was a totally risk on trading, when all the money went to equities, the gold should have sold to lower levels, maybe 1821, even 1805, 1800. It didn't. Actually, the green day, and really holding, it's really grabbing to 50 moving average, 1853, almost 1854. We closed on Friday. So that's a very strong sign. And if the market chooses to sell off next week, the gold might take another leg up. And of course, we need to break the recent highs here at 1869 in order to go higher. And then if that happens, we can go and retest 1900, or at least try to retest this moving average here at the higher levels. So that's gold. Palladium trying to lift up. Definitely it's not a rocket, but it looks like it was a lot of accumulation here at 1960, and Friday was a strong move higher. So based on this accumulation, somebody bought it, it looks like it, and they would like to take some profits. So we might see a continuation to the upside, maybe to the 200 moving average at least, and that would take it maybe for another 80, 90, 100 points to the upside. So that's palladium. Copper, only on Friday actually had a nice move. It got some conviction as the equity markets continue going higher. Again, China is not helping it. As I shared with most of you that last week and the week before, the copper is very, very sensitive to what's happening in China. It's being used a lot in construction there. And of course, China lately, they had some issues there with development and construction, and in general, economy is really limping. So Friday we had to move higher, and if we do continue higher, and if the equity market continue higher, and if China miraculously moves higher, then this level here, 435 would be, let me just draw the line there, 435 would be the next level to retest. And if we are breaking through it and closing higher, we might continue to the upside. Otherwise, we'll be hitting against the ceiling and eventually sliding lower on copper. So that's as far as commodities. So let's move to Forex, and we start with dollar index. Dollar index, it's been really, really weak since making these highs the middle of May. We've been really sliding lower. We're still about 50 moving average. This 3 days of Thursday, Wednesday, and Tuesday were pretty much the same levels. And then Friday, as the market moved higher, we did close below these three days. The only thing, the low here on the 24th was 101.64, and we closed 1 penny below it. We were much lower than we closed 1 penny below it. So this could be tricky. They tried to suck in the sellers, but we came right back. So very, very tricky here. And it looks like we might bounce from here because these 3 days was a lot of accumulation with a lot of downside pressure. They didn't let it. Then we had the fake breakdown on Friday. We closed just 1 penny below this Tuesday level, and we might see continuation, or we might go a little bit lower to kind of touch the 50 moving average at was it 101, 101.20 area, and from there we might bounce. Again, nothing changed in the big picture. We still have Feds coming with more increases. Inflation is still there, so the dollar could regain its strength and continue trying to retest the highs. It might even go higher. As we share here, we stopped. We made a triple tap on monthly chart. This level was 2016 December. This level was March of 2000, and we just touched it after 2 years, a couple of months. Again, we failed to go higher. We did actually move a little bit higher, but we closed, or we about to close the month lower there. So very, very interesting here around 101.60, 101.50 for dollar index. And let's take a look at some majors. If you remember last week, I said the Swiss franc was very strong. It continues being strong. Dollar fell below 50 moving average against Swiss franc, but it is holding, like I said, the Tuesday level here. Yen, the same thing. Dollar got a little bit weaker against the yen, but we are holding these levels around 126.5, still holding. And Euro is really, really grabbing to this 50 moving average around 107. We really came, just to remind you, we came below 104. A nice move of recovery. We had the 3 days at the same level. We had a fake breakout. I mean, it's upside down from a dollar index. That's exactly what we saw. It's a mirror image. So again, these levels, if the dollar regains the strength, we might see a slide below it to maybe lower levels, at least 106.50, and might go even lower there. Pound had a nice move, but we're really hitting, before even touching the 50 moving average, we're hitting the resistance here at 126.5, 126.30. Let me see, Friday we touch, yes, 126.66 we touch on Friday, but we closed below this previous resistance over 2 days. After that, we had a very strong sell-off. So similar thing can happen here, or we might go a little bit higher, another maybe 40, 50 pips, and try the 50 moving average and see how it feels against it. So that's as far as the majors. Now, exotic ones. Just want to bring the Turkish lira. Turkish lira, if we remember, a lot of accumulation there that would move higher as inflation in Turkey is historically high, where the whole week pretty much weakness in Turkish lira. Only Friday was a little bit of a recovery, so dollar went down against Turkish lira. Now, what's next? It's hard to say. It's a nice move. We might find a little bit of a correction mode here, or we might continue higher if nothing happens. We might pretty much touch the 17 eventually. We closed at 16.20 on Friday. Now on ruble, they cut the rates and immediately the ruble showed the weakness. But again, I don't really want to talk about it, because if you read real stories, it's all fake, it's all artificial. And in a ruble, you can't really buy a dollar for 66 rubles in Russia. And if you, I mean, I spoke with my friends there, and if you really want to buy a dollar, it's very hard to find it there, and you would pay on the black market maybe 80 to 90 rubles per dollar. So all this is artificially driven. So I'm not really going to go into, because fundamentally it's very hard to understand it. The whole idea is really why it really dropped here, because the Russians, they would demand everybody who buys the oil and gas to pay in rubles. That means they would need to convert in rubles and pay it. So it's very complicated. But what we see on the chart is a nice recovery, 3 days up since the decision that they made on cutting the rates. So that's the ruble. Now ZAR, the last pair I want to bring it up. ZAR had a nice correction, as we said, from around 16 and a quarter. It was a very strong resistance there, and I mentioned to you that we might pull in a little bit and retest the lower levels, and it looks like we're finding some support around 15 and a half. We didn't go close to the previous support here, but again, we have a little bit bullishness here as a 50 moving average crossing the 100 and 200. So it shows a nice mood to the upside. So we might see continuation to the upside from these levels on ZAR. And that's pretty much finishes with the Forex. And one more thing that, of course, a lot of you trading cryptos, and what really my thoughts on the Bitcoin. If you take a look at Bitcoin, market moved higher in the past week. Bitcoin didn't. Actually had 1, 2, 3, 4, 5, 6, 7, 8, 9 straight weeks down. Not a green week. I had a few green days, but really in a tight range here. And when I say tight, it's like 1,000 to 2,000 range. It's been a while. I don't see a range like that for a while. Just zoom out. It haven't been. It's really tight over here, right? As you could see. So it's ready to move. Now, a few thoughts about it. Okay, of course, I'm not a prediction guy, but lately, the cryptos or Bitcoin, if you take it, the move down with the equity markets. Now that the equity market bounced to bring S&Ps, take a look, all this bounce. We said what 6.6% on S&Ps to the upside. So I thought it was really a time for Bitcoin to really bounce with it, because it was falling with the market, so it might bounce with the market, but it didn't. So it's a concern. It's concern for the crypto traders, of course, with the recent issues with other crypto coins and so on. It doesn't look like that the bulls are really so eager to get in and buy it here, because so what can happen? We might continue and retest again 26,000. There's a lot of opinions, always controversial. Some expect to go higher, retest the highs. I've read some said we're going to retest 15,000, 20,000. Some even say the value of the Bitcoin should be 8,000. I really don't know. These are the speculations. I don't think anybody knows. So I wanted to bring to your attention that the equity market bounced and the Bitcoin didn't. So it's a weak sign generally. Okay, so again, just to put it all together, we have NFPs in the upcoming week. We have Monday, it's Memorial Day, when the markets are going to be closed in US, so it makes it a very short week. We had a nice bounce, like we said, 6+% for major US indices. European indices went up. China didn't really move up much, still concerned there. And the dollar had a nice sell-off in the recent days. It comes to a certain support at these levels. So we'll see if that support holds, or we might slide lower. We don't really know. Again, it's a shorter week for the US market. So Monday, it's going to be a little bit choppy because the whole world is really watching as a major indication the US markets. So be cautious, of course. Manage your risk, manage your funds. Be happy, be healthy, be excited. Enjoy the weekend and have a successful upcoming week. And we'll be back next Sunday. All the best. Take care.